Verizon Communications announcing plans to buy Yahoo's web assets for $4.8 billion Monday, a remarkable fall for the Silicon Valley pioneer that once had a market capitalization of more than $125 billion at the height of the dot-com boom. Joining us now to discuss is WSJ reporter Ryan Knutson. How are you, buddy?
I'm very happy now that this deal is finally
It's been quite a long process.
Yeah, we've been watching this, and Verizon has been the expected buyer of this company since earlier this year, like February, March, April is when the auction process began, and we thought, well, Verizon's the most logical buyer. They've finally done it. Now I can enjoy the rest of my summer.
All right. Well, let's dig into the details. First of all, what's included and not included in this sale?
Verizon is buying the core of Yahoo's internet business and the real estate that business is sitting on, the relevant patents that go along with that. There's a whole slug of about 4,000 patents that is sitting outside of the company in a unit called Excalibur. It also owns a stake in the Chinese e-commerce company Alibaba. It owns a stake in Yahoo Japan, both of which are enormously successful companies, and in fact made up basically 100% of Yahoo's market capitalization. The market before this deal was actually valuing Yahoo's core internet business negative in a negative number. So the fact that they got $4.8 billion for it should be seen as a relative success, given the fact that the market placed all of its value on its stake in those Asian companies.
Yeah, let's talk a little bit about that. What does this mean for shareholders then?
It's a good deal. I think it's a good exit for Yahoo, because they're combined, rather than doing one of the deals with one of the private equity companies that were also in the mix here, they're going to merge with AOL, essentially, is what's going to happen. AOL and Yahoo had talked over the years about doing a deal back when they were both behemoths of the internet age. But now they're shadows of their former self, and Verizon has picked them both up, and they're putting them together. There's real synergies that can be gained from this deal. I mean, AOL and Yahoo are basically trying to do the same thing, build a portfolio of online assets, create advertising technology that people could come to and then sell ads against that stuff. Verizon is now going to juice both of those things, put them together, and try as best they can to build a counterbalance to Google and Facebook, which are the behemoths in online advertising.
Okay, when is this deal expected to close, and what will happen with Yahoo up until that time?
The deal is expected to close probably in the next few months. There's always an antitrust process that you never know what could emerge, but I imagine that they'll see this as an opportunity to, if it works out, create a counterbalance to Google. I mean, that company has more than 30% of the, captures more than 30% of the global ad revenue each year. So it's really dominant. Putting AOL together with Yahoo will at least create the opportunity that maybe a third player will come along.
Okay, and what does this mean for Verizon's strategy now they have this new piece to their company?
Yeah, well, Verizon is the most successful wireless company. It's known to have the best wireless network. It has about 110 million retail wireless customers. But the growth in the wireless industry is starting to slow down. Pretty much everybody has a smartphone now. There's a lot of competition among the wireless carriers for price because people are offering bigger data buckets at the same prices. So it's getting tougher for them. The market is really starting to grow up. So Verizon's trying to figure out, how else can we make money on our 110 million wireless customers? They're trying to figure out a way to build over-the-top services that will allow them to build a new revenue stream as their wireless growth starts to slow. It's a tall order. Verizon is about $130 billion a year in revenue. Yahoo and AOL are just a few billion together. So in order to really move the needle, they're going to have to really hit some home runs.
Okay, and a lot of people are wondering what this means for the future of Chief Executive of Yahoo, Marissa Mayer. She makes $100 million a year. She has a big severance package, but she's saying that she plans to stay. But is that realistic?
Yeah, on a call with reporters and investors this morning, she said, "I love Yahoo. I plan to stay." She's known Tim Armstrong, who runs AOL, for a long time. They used to work together at Google.
Yeah.
It's hard to see her retaining any meaningful executive role in the company exactly, but she certainly has to continue running Yahoo while they while they close the deal, which won't close for a few months. She said that she wants to see it into its next chapter, which probably most realistically means she will she'll manage it, she'll hand it off to Tim, and then reportedly she can stand to gain, I think, $50 million off of the severance, so she'll have a nice parachute that she can go use to relax a little bit.
Okay, what kind of competition does a combined Yahoo AOL potentially face as they go forward?
It's going to be a huge competition. I mean, one of the things that Verizon is trying to do is build like a new media company. They've got this mobile app called Go90. They're hoping to add to that portfolio the assets that Yahoo has with Yahoo News, Yahoo Sports. They want to get a lot of eyeballs, but there's enormous competition for eyeballs that, everyone's trying to, they want, Snapchat wants you to use Snapchat, Facebook, everyone wants, all the mobile companies want you to spend time looking at their app on so that they can sell advertising against that. So what Verizon's trying to do here. It's going to be a really tough job for them to build this into something big, but they're certainly putting their weight behind it.
It's becoming more and more fragmented. So how does this help define what exactly Yahoo is, especially to CEOs who have long struggled with this? I mean, there have been lots of CEOs during this 2-decade history.
Yeah, I think there's been about 6 CEOs at Yahoo over its 20-year life or so, and that's been the greatest question that it's faced over the years. Each CEO has sort of swung the company in one direction or the other. It tried to invest heavily in becoming a media business. For years, it was investing in a lot of online television shows, but then it started giving up on search. It began as a internet search company, but then it started being outpaced by Google, and so it sort of let that go. And then a few years later, it started to try to swing back and get back into search. And so it hasn't really figured out what it wants its identity to be. And that has really sort of been the cause of Yahoo's downfall, is where Google was just going to be the best in search. All the other Silicon Valley companies didn't have a clear identity. Facebook, we're going to be a social network. Yahoo wanted to sort of be a jack of all trades, but it ended up not really hitting any home runs.
Ryan Knutson, keeping us in the loop. Thanks a lot, buddy.
Thanks for having me on.
All right.